I'm trying out streaming for the first time live, so bear with me while I fumble through that. First off, I guess, has anybody got any burning questions that they're struggling with, just want answers to, things they're interested in, anything I've covered recently that needs recap?
Well, you certainly could go into a little more information about A-Starter and probably remind me what I might need to do and what I actually invested in. Isn't that disgusting? But
this is
yeah, so I've just staked my Cardano, but obviously we're going to get A-Starter tokens as a reward. I'm assuming that that's what my mind tells me. But is there anything else I need to know? You better tell me.
Yeah, no. So there's been nothing for you to have done for the past year, so you're not out of sorts at all. We just now need to get to the point of the token generation event is the sort of the main actual activity that then we start looking back at things, because you're a signatory on the opportunity DAO, aren't you? So I know you didn't do that. Okay, I'll need to go and check the list. I can't remember who's on it now. Again, it's been a while since we had to do anything, but
yeah, I think Paul was.
Paul was on there, definitely. Yeah.
Trying to think. I'm in the A-Starter opportunity as well, but I'm not as a signatory though.
No, okay.
Yeah.
So
yeah,
I actually met I met Paul Chamberlain, I think it's his name. He's from A-Starter. He was at the in Dubai at the venue.
Oh,
and I had a chance. Yeah, actually. So he gave me one of these NFT to log in. I've not done that yet. It's a scratch card.
Okay.
And then what he said, what that'll do is increase the amount of staking rewards, I think. Yeah.
Yes, exactly.
But yeah, I met him in person, and he said, yeah, they were still continuing to work on it, but they didn't feel comfortable to go live during the bear market. So I think that's where they were as a project.
Yeah. There are several things to be concerned about when trying to launch in a bear market. Several other projects did and had a raise, but then because they had a successful launch, it lasted for about 10 minutes and then the price plummeted and hadn't really managed to pick up again. So then that just leads to a demoralization in your investor community, and adoption of the products becomes less likely. So it is a risk to launch in a bear. So A-Starter have probably done the right thing, had some good advice, consulted the right people, and have held off. Certainly the last project launch that I've seen since then was Optim, with their token generation event. Again, similar thing, they'd promised their token, or they're not promised it, but they'd talked about their token being available. They'll actually launch their product first, which was great. And that's the one that I used to take the loan out for the stake pool. And their token generation event went just superb. It's the best one I've seen. Their price did pump a little, drop a little, but it didn't go back below that sort of launch price, which is just phenomenal for a first launch. So there are definitely better ways of doing launches than we've seen to date. And Optim led the way. Hopefully A-Starter will have been paying close attention and start to pull up on some of those things as well. So yeah, this is the OWL NFT, and it's AWL instead of OWL. I'm going to focus. There we go. So it's a part of the sort of launch mechanisms they're doing before the event itself. So if you are delegated to Blue Pool, and we've got a form inbound that will let us register for additional or pre-launch staking rewards. So if you remember back to the original deal, they were going to do the token generation event, then we were going to have a period of merge staking where you could stake with Fluid Pool. You'd have a certain amount of ADA delegation and AA token delegation in your wallet that was staked to Fluid Pool, and as a result, you'd be rewarded with additional AA tokens as part of their sort of merged staking protocol, they called it. Because they haven't had their token generation event, you can't have any AA tokens in your wallet, so then they can't track exactly what your investment is to proportionally, aggregate your reward. So they've held off doing that, but now they're putting together another bit of tech that will actually help us monitor that, manage that. So it will result in them aggregating your reward prior to token generation event that will then be awarded to you on top of your token buy-in. So we'll get some reward, some benefit from having from the point of registering to the point of actual token generation event, as well as then afterwards. And if you have your hands on one of these NFTs, then you can actually boost your staking rewards prior to and post launch, I believe. So I've got one to give away. I'm going to ask JC John if we can get any more, but certainly I've got one which is great, and so I'll raffle that off today if you're up for it, and anybody's on the call can get all the NFT. So it actually has a claim QR code and a claim code, so I don't actually have to physically send it to you. If you do want it though, I can send it to you, and then you can have that in accompaniment with your actual digital on-chain NFT. But either way, you'll get your staking rewards. So we can look forward to that at the end. I'm going to give up on this stream for some reason. There's a setting somewhere that won't let me do the live stream. I'll try and get that going for next time. Sounds recording. No. Yeah. So I'll give up on that for now and just concentrate on actually talking to you. Good. So that was the A starter team. Any questions on that? Any more updates you need? I probably should share the DeFi Llama progress because that is interesting. Screen 2.
Jonathan, could
Yes.
we use the NFT for our DAO, or does it have to be for an individual?
The AA token will be distributed to individual wallets unless we as a collective decided not to move them on from the DAO wallet. So yeah, potentially we could just do it like that. Maybe we could put that to a first DAO vote. Then that would probably save a bit of admin on everyone's part.
Fantastic strategy, Archie.
Yeah.
If you like the sound of that, it might be a winner.
Well, I just thought, because then everyone can kind of benefit from it.
Yes,
know. So yeah.
Nice one. Good chat. Okay, let's propose it to the DAO. See what we come back with. So the DeFi Llama page is this one, and if we look now at are you seeing that? Okay, it's a bit small. If you look at just filter it for Cardano, then we'll see the actual. I've got it switched into ADA mode at the moment, so it's showing you total value locked in protocols on chain. So that's in terms of ADA amount. If you switch to dollar amount, it looks a little different, but you can certainly see the recent uptick in terms of actual dollars, fiat money being put into the chain and stored in lending, staking, liquidity provision on the chain itself. And in terms of dollars invested, we're approaching all-time highs, which is phenomenal. And certainly we're not seeing this sort of activity to such a great degree on some of the other chains. Ethereum I haven't looked at for a bit actually. So a quick look at that. Yeah, so they've got a bit of an uptick, but it's really not denting what we're seeing on Cardano, which is very exciting. Tron doing better. That's looking good. Ligon, not so much. Can I see Polkadot? Have I missed it? Yeah. They don't have any on-chain metrics, so they're not doing on-chain locking. So that's why they're not showing up at all. But they do have lots of utility, and in fact, there's a bit of news about Polkadot and Cardano coming up later. But anyway, so that's in US dollar denomination. If you switch it to ADA, then you can really see how ADA holders are, since March and earlier, even, we've been plowing our ADA holdings into various different projects on chain, putting them into lending, borrowing protocols, providing liquidity on dexes, buying NFTs. All that stuff can be tracked within this metric of total value locked. However, the A-Starter project is now sitting 6th on the chart, and they don't have a live product yet, which is quite impressive. And it's because Emergo, the founding entity of, so effectively when Cardano launched, was being created by Charles Hoskinson. He didn't target the US market at all. I don't know whether that was just prescient in terms of regulatory concerns, but was involved in Asia quite a lot. And so the early investors in Cardano were predominantly or heavily based in Asia, and Japan in particular is a large investor. And so at the time, the earliest investors, the largest investors, were Japanese, and they actually went on to form a significant entity in and of their own right, alongside IOG, the technical developers of the blockchain protocol, and the Cardano Foundation, which was set up then to manage the treasury that the chain would produce. So we've got that sort of trinity: IOG, Emergo, and Cardano Foundation. Emergo they had a focus on being the commercial entity that would go and bring large enterprise to the chain and really grow the adoption of it in that sort of enterprise space. And they have a significant amount of ADA themselves, and also are working in all different areas of the world to really bring private money into Cardano, investors using their knowledge of the protocol to drive adoption as well. So some of the largest projects that have come about are being worked on by Emergo now, and so they are the guys that backed the development of the A-Starter DEX, and they're the guys who've put up this liquidity of $14.67 million. That's a dollar value into liquidity ready for the DEX at launch. So being able to launch as the 6th largest project on Cardano is, from standing start, is really impressive. So great to have that as a bonus for the project. Of course, this is crypto. Nothing is guaranteed. There are risks involved with anything, but so far we're looking like we've backed a good horse, as it were. And certainly the technology is coming on nicely from the team as well, which we'll have a quick look at here. Dex.A-Starter. Why did that not load? And this is their DEX. You can see it's in beta, so it's a public beta now. before we had access to the private beta. It's now public, and they're going through their audit with Certic at the moment. And this will allow you to do a very simplified user interface, clean and simple, as opposed to simple as in no utility, but very tidy. You can do straight swaps of your tokens. ADA for IUSD. USD is a sort of stable coin on Cardano. It's a synthetic, over collateralized stable coin. So you provide the liquidity yourself, the collateral yourself. You can put your dollars or ADA into the back end of this token and mint a stable coin off the back of it, US dollars. So if you wanted to swap some ADA for USD because you're getting into some trading, then this is a great interface for doing that. Slippage settings, very standard. And you can, of course, connect your wallet. I think I've got a wallet here. I've got Eternal. I do. And then that will allow you to actually go ahead and carry out some swaps. It's pulled in my ADA balance there to perform some swaps with. They've got their Earn platform, I think, still coming. Oh no, this looks further on than I last saw it. So this will be effectively like providing liquidity. So you can actually, if you hold ADA and something else, so we've got some gimbal tokens here, or Book actually is a quite popular token now. I could actually have an equivalent value of ADA and Book token, and then provide that as a pair onto the exchange. And then anytime anybody wants to swap between Book and ADA, I will earn the fees that the portion of the fees from the liquidity that I provide. And so that's a good way of earning additional interest on top of your token holdings. And I use that strategy regularly for myself. And I'm wondering about doing a paid course just on that would actually show you walk you through hand in hand all the steps needed to start doing that as a means of earning from your holdings in the Cardano ecosystem in particular. And there are several dexes that I've got a long track record now of using, and I've got a good feel for how they work and what sort of returns you can see and opportunities there are in that. So if you are interested, then give us a note in the comments. That would be good to see, either on this call or in YouTube if you're watching this later. This is an order history, and then you have a one-click minting facility as well. So if you ever wanted to create your own cryptocurrency, you can actually do it yourself here, just by putting in your name, saying how much you want to generate, and then submitting some metadata around your token and the policy for it. So this is what the utility that Cardano really brings, is its ability to be the powerhouse behind a very simple user interface, and the fact that anybody can offer this sort of facility is testament to the amount of utility that's actually baked into the layer one of the protocol. So it's good. And then this will be the ISPO, initial stake pool offering, which Fluid Pool is a partner pool of. So once they get their token generation going, we can actually start to see this happen. Before that, we will have a personalized form that we can contribute into. They are running an ISPO already. So if you have ADA tokens that you want to put into earning AA tokens already, then you can do that by staking to the AA pool. They've got AA and AA1, I think, are the two pools that they have. So stake with those and you'll get AA token rewards. Of course, you never have to stake your whole amount. You can still be earning your maximum ADA rewards at community pools like Fluid. And then when the token generation event happens, you'll be earning AA tokens as well as ADA from Fluid Pool. But till that point, you could actually stake with AA. Good. So that's project. It's looking healthy. We await news. Well, first we await news of the form. I'll get that all to you on the Discord server and through these calls. and then we'll have the NFT giveaway today. I'll see if we can get hold of some more, and we'll do some more. But yeah, that's the A starter project. Any questions on that?
So, Jonathan, just quick, so trying to understand this. How can you? So, are you trying to say that you can this issue a token? That means it's your own token.
Yeah. So if you want
So
to,
what's the advantage of doing that? Like, look, are you going to sell that to your, can you sell to your community or?
yeah, exactly. You can try selling it directly. That's how if you've got a big project, you've got some ideas going, like A started with their decks. They wanted to build this decks out, and so they managed to pair it with the token generation, although they haven't had the token generation made yet. So they got the sale in early. If you wanted to, if you, for example, had it could be a token of any kind. So you can have utility tokens, which is a bit like so this NFT is a utility token in itself. It's a non-fungible one as opposed to a fungible one. This form is for generating fungible tokens. So you'll have multiples of the same type, like a pound coin or a dollar or a ADA. And if you want to be distributing those to your community, they can then use to spend with you in some way, shape, or form. That could be almost like a loyalty token. So it could be like a voucher system you run. I have an offer on it in my business, the web development business, where if you actually are willing to pay in Gimbal tokens, which is a community token on Cardano, you can pay for part of your web hosting with the Gimbal token and part of it with pounds. And so that's a way to offer people a discount on their purchase of your products. So yeah, you can have any ideas you want about utility for your token, how it might work. You can just use it as a voting token in a DAO, something like that. But ultimately, you've got to be the one that generates the value that then starts to back the token itself. And so if you just want to play with it, that's fine. But if you actually want to have it gain in value and then be listed on exchanges and all the rest of it, then you have to put some work and time and effort into thinking how that's going to come about, and also grow a community around it. But certainly that's an enterprise in and of its own right, and this is just a simple interface for actually get you going. So quite powerful.
But Jonathan, what sort of dollars does it cost to do to create your own NFTs?
And so creating your NFTs is a little different. That's more expensive because with an NFT you've got some artwork associated. So you then got to have some mechanism for storing the artwork and providing it long term. So you would probably not use this interface. You would want to use, if you want something slick and simple to use, then you could use NMaker, which is the largest NFT making, can't spell, platform on Cardano. Patrick Tobler is the guy who heads up this project. I got in a pre-token sale for this token as well, and it's done very well for me. But you can actually use this as a really slick interface for creating your own NFTs, and it'll walk you through that process. You then will hand over a bit of cash or ADA, so you can pay with ADA to get your tokens generated, and it will help you upload your images, your artwork, associate them with the token in the correct way, have your token sale page. So when you're creating an NFT, you'll typically have the ability to invite people in to mint the token. So that tends to be when you can get the NFT for its cheapest price. So you might have a set a mint price of 40 ADA, or something like along that. It can be anything you want. People then come, hand over 40 ADA, and you will randomly generate an NFT for them, or specifically generate an NFT for them that they'll then be sent to their wallet in return for the ADA hitting your wallet. And so that can be a way to fund your launch. You can then have sales of your NFT on the secondary market. So you can bake that into the metadata around your NFT at launch, and that will give you a portion of the royalty of the secondary market sales. Portion of that will come to you, so you can then have effectively like royalties going on into the future.
Jonathan, with royalties, just on that, because you've touched on that part, is there more flexibility now in the royalties that can be paid to the original creator?
Yeah, so at the launch of NFTs on Cardano, there really wasn't any of this utility there, but now it's matured, got to the point where we've got sort of semi-ratified standards for all these sorts of facilities and features. And so with this MMaker platform, you can go through, just fill in forms, answering questions about the features you want, and within that, you'll be asked about royalties and how you want to see what proportion, what percentage of royalties you want to see coming back to you through the sale. And that's then sort of baked into the data around the token itself. And when it does hit secondary markets that support that facility, like JPEG Store, you'll get the portion just sent to you straight back to your wallet. So yeah, lots of potential for businesses, small artists to really start to leverage NFTs in a much more rich way than there was a year ago, 2 years ago. Some of these standards like SIP68 actually now allow you to create an upgradable NFT. So you could have it as a sort of membership one. So yeah, you got an NFT from Fluid Pool for joining as a staker. Once you've then been in it for a year, we might upgrade that NFT to actually give you more staking rights or access to our NFT sales at a discount or something like that. Maybe a discount in our real world products as well. So hosting and domain purchase and SSL certificates you can get discounts on. And that's ways to sort of create a long-term loyalty to your brand, your products, your company, whatever, because that's something that's very hard to achieve with today's web, is that loyalty always used to be around, a lot of it was based around human relationships. So you'd be loyal to your local corner store because you went in, said hello, you got your paper and your pint of milk, and developed a relationship, and so you were loyal and they were local, so it was easy. That then transformed into supermarkets, which you'd have to drive to, and then you'd just be going based on price. And now it's moved online. Effectively, you just buy from Amazon because they're the cheapest. They have the delivery mechanisms all sorted, and so it's very hard for anybody to come in then and win in that space. And if an alternative to Amazon comes up that is cheaper, you're going to just move ship because you don't have any loyalty. Actually, with the switch from a Web 2 mindset, which is all about selling and us being handing over our data and getting some functionality back for it, we're now moving to a store of value web, where just like in blockchain, we've seen real value being stored online. DeFi Llama is a testament to that. The amount of dollars tied up in digital assets now is huge, and we can actually get back to building some kind of loyalty, because that digital storage layer of value is being tied to your online activity. So if you do show some loyalty to projects, then you can have that represented and paid back to you in real utility, real value through blockchain. And we're going to see this evolve from just value exchange into knowledge and value combined, particularly with AIs. And I'm perhaps going down a bit of a rabbit hole. I'm missing my original point, but AIs and the store of value are hugely tied together, because you're effectively going to have the ability to recreate your assistant, your workforce in digital equivalents. And there's always going to be space for humans in amongst all this. I'm not too fearful of that, but in the meantime, a lot of the automation, a lot of the pain you'd have in starting a business when things are very difficult, very pressured. The most you can get out of the resource the resources that you do have, the better. And so being able to pay for an artificial intelligence engine to really power your marketing activities, your research and analysis activities is huge. And if that can actually be returned to you in terms of value you're paying in crypto, in digital currencies, you're yielding returns in digital currencies, then all that can be tied to the artificial intelligence. So people who generate artificial intelligence can then be having revenue streams tied from it. They can be then creating the NFT sales and the loyalty points and the on-chain online systems that people are logging into and interacting with you. So, your whole workforce can actually, your whole customer-facing aspect can actually be massively leveraged with AI and with value storage in a way that hasn't been possible up until now. So the Web3 world will be significantly more advanced, more developed, and fairer, and we'll have our privacy back. so yeah, it's a glorious future that we could paint, or it could become very dystopian and the AI takes over the world and kills us all. So some you win, some you lose. Anyway, back on point. Where was I? NFT, yeah, this is a great platform for looking at building out NFTs, which is a bit more complex. If you are just looking for a fungible token, you like giving out vouchers that you can use to sell, then a platform like the A-Starters token launch will be ideal. So I hope that covers your questions, Carol and Utan. Shout if not.
Yeah, it did.
Cool.
Well, one thing, Jonathan, I just want to do. I think you sort of mentioned that you've got like, it's quite different topic really. You mentioned about you do wave hosting, right? And I can exchange that for Gimbal token. Is that? Did I understand correctly?
You can, give them some. If you have some Gimbal tokens, you can use that to get a discount on our web hosting. So that's sort of some utility you can attach to tokens.
I see. Because in fact, I'm keen on that because I do need some web hosting done. So I'll probably contact you later after this call. Yeah.
Yeah. Okay. Great. Let's have a conversation. We can see how that works.
Yeah. Okay.
Right. I do need to get back to my notes. So one of the things that's been happening recently, obviously, is the Cardano Summit, which was huge, which was great. In fact, I might just Dinesh is still here, but he did send me some pics, and I think I'll just share some because they were great. Actually, I don't have access from here because I'm in Windows. Okay, I'll maybe post them to the group or get Dinesh too. But it did look a really great event, and the summit itself is going to be leaving a legacy of new projects coming out and sourcing, and there are a whole load of talks and conversations about those projects that you can dive into here. So if you are looking for new projects that are building, have already got some traction, and have managed to get the attention of Cardano Foundation to put them on stage and have a look, then this is a great place to find content on those creators now. So the talk maybe I would suggest you to have a look at now is the builders one. I don't have my link handy, but Battle of the Builders. Can I search for it? Might even be on second. No. I'll dig that out and get it to you. But there's a good video showing you 10 projects, I think, that are launching and that are well worth a look at. And some of them have tokens associated, not some of them don't. But that's a good way of evaluating potential places to invest. And as part of that discussion around Cardano Foundation, their management of the treasury, there's a lot of discussion going on in the community at the moment around well, how big is the treasury? How quickly is it being spent? The Cardano token itself, we're dispensing it all the time. There's only going to be 45 billion of them, and you know, is a rate of release and the rewards that we're earning actually appropriate, commensurate with the sort of values that we want to be pushing? And this is a really good analysis or open source tool that's been developed by Cardano Foundation to actually show us some of the stats in and around the chain. So a little deep, and I'll try and give it a light touch. So this is probably the most easiest chart to understand. So this is an indicator of the growth of the treasury as it stands from launch, pretty much. So back in Epoch 210, the treasury started accumulating ADA. The treasury is primarily funded from on-chain activity. So as people buy and sell tokens, they're paying a transaction fee, and that fee is carved off. 20% of it goes to stake pool operators to then reward delegators to stake pools. The rest of it pretty much goes into the treasury. So that treasury is growing all the time at a significant rate. And as you can see from this chart, it's growing steadily. Now these blips that you can sort of just make out, the first one here, there's another one here, another here, and this is where the chart sort of dips down a bit, and they got larger. So this one, I don't actually know which fund that was, but that represents Catalyst projects payouts. So the treasury, the Project Catalyst fund is about $16 million of ADA each quarter, and that gets paid out from the treasury in chunks. And so that's $60 million, and you can see the impact it has on that curve is absolutely minimal. So, you know, that's giving us a sort of an idea on the rate of growth of use of the chain, of the treasury that's being collected from the transaction fees on chain. And even a $16 million innovation fund is not really denting that growth. So it's starting to garner conversations around, okay, well, are we making most effective use of our treasury? It's all just sitting there at the moment. Some of it's being delegated out to stake pools to help them stay and become sustainable. Some of it's going to Project Catalyst to help grow development ecosystem and innovators in that space. But there's more we could be doing. I'm positive. And so some of these charts, now that they're open source, we actually get a feel for some of the figures behind them, are starting to raise conversations in and about the community. And it's just really, really good to have this level of openness and transparency. And this, to me, is one of the one of the golden childs of cryptographic digital currencies, because you've got access to all the data. You've got tools that are built and open sourced, and so anybody can then use them to do their analysis. And that is a level of openness and transparency that you just don't get in the traditional financial markets. You know, if you've got the British pound, for example, we know roughly what the figures are that are given to us by the Treasury, the British Treasury, the government, and their opinions on it. But those figures we know are manipulated to yield the results that are needed by the economy. So if we're struggling financially, then they'll say, well, we need to tighten the belts, and so the figures will all be about promoting or pushing that value that, yes, we need to tighten the belts. Everyone's going to have to be receiving less in benefits, paying more in taxes to help boost the treasury of the nation. But the reality of those figures are that they are manipulated. We don't need to do them. This is in stark contrast to that, because the figures are all handed out. They're all on chain. They're all public. They're all viewable. And so the analysis can be done by anybody and everybody at any point in time to a very high degree of accuracy. And there are several alternatives to this particular tool that have been available over time as well. So one of the ones that I do like as well is from, say that wrong, can't type and talk, Sea Explorer, which is a Cardano Explorer on chain that I've pointed you at several times before. They have an area on their site under more called pots, and this is showing you the sort of raw data that they've pulled off chain and put into their chart analysis. So if I take off the some of these to make it a bit simpler, it's not letting me do it. There's a refresh. This is, for some reason, not letting me filter the charts down. This has worked every time I've been on it, so I don't know what I've done differently this time. Maybe they've had a change of a bit of utility, or it might be the browser I'm in. Okay, anyway, we can just try and make out the lines behind. The ones I'm interested in are this blue treasury line. So that's the one tracking up here. And that's equivalent to the chart that I've just shown you from that other open source tool. And in amongst there, we've also got the reserves. So this red line, and you can see that's on a counter arc to the treasury. So we've got, and that reserves figure is basically telling us how much Cardano, we know exactly how much Cardano is ever going to be minted, ever going to be distributed. And that is diminishing all the time because we're minting all the time. So every time a stake pool operator mints a block, that reduces the amount of ultimate number of blocks that will ever be produced, tokens that will ever be produced, ADA tokens that will be produced. And so that reserve value is coming down, but we know in the meantime the treasury is going up. And so this gives us a nice representation of how once all the tokens are produced, what's going to happen then? Because at the moment we're using that minting of those tokens to actually reward people with interest. So we need an alternative method of generating interest once all the tokens are minted. And so it might be that we're using some of these treasury funds for some of that interest activity as well. And if we can, effectively bring that treasury line into a state of equilibrium where it's staying horizontal, the treasury is not growing, not diminishing, and we're still being able to pay out interest on the holdings, then we know that we are matching what would be the equivalent of inflation in a national scale. So you've not got too high in interest rates, that people's cost of living is getting higher and higher all the time. You're not paying too much out in benefits or in rewards, interest for people holding the token. And you've actually got a sustainable, viable, long-term economy then. And that's a sort of metrics now we're starting to play with. And because we're a tiny microcosm of a nation at the moment, Bitcoin is up there in the ranks now. It's sort of 20th largest currency in the world, out of fiat currencies. But that's where we're sort of trying to head. We're trying to move our financial system from the volatility of nation states control into some large on-chain public viewable chart of metrics like this that we can actually analyze and understand and get to grips with. And so this is where we're starting to create economic policy, really, which is very exciting to see. So those conversations are happening as an example of the deep thinking that is going on in and around the space. If you are interested in that sort of stuff, then keep an eye on these. I'll try and raise them as it comes to my mind. So as another illustration I liked, this is a view of the a pie chart of the reserve and treasury. So this was the initial token generation event for ADA itself. So 1.4% was given to the Cardano Foundation. So that was effectively the the start of the treasury. 5.5% were given to IOHK, or IOG as they're now kind of known, which is the technical developers of the blockchain, the protocol. We had 4.6 given out to Emergo, which is the enterprise arm of the chain that I was talking about. They're the guys that are backing a starter development. And then we have 57% went into public sale. So that's a significant portion of the tokens at launch being sold to the open market, which is great, because then that diminishes the risk of owners, people, these IOHK, Emergo, and Cardano Foundation only control what's that, less than 10% or 10%, just over 10% of the token initial supply, and we had 30%, 31% put into reserves. So this is a good example of a healthy token distribution, token generation event, and that the creators of it, the generators of it, aren't holding the vast proportion, because if they did, then they're the ones who would be looking to sell, to exit at some point, dripping it off into the market. And when they do that, that affects the price negatively quite significantly if there are large chunks being sold. We do have a large number of people just holding the token themselves, which means that people are invested in the chain as a whole. The vast proportion of it is in that, and we do have a decent chunk of money tied up in the reserves, and so that gives us lots of leeway, lots of runway, effectively, to get to a point of equilibrium where the reserves aren't being diminished, and the participants in the ecosystem are still being rewarded. So we're able to create a state of equilibrium. So that's where we want to get to. We're not there yet. We've still got some growing to do. We're still paying out at the moment, and not and in fact we're earning vastly out earning our payments, which is good, but that needs to come down, so we're actually creating viability. And then this chart, I think this is the last one, is showing us that treasury growth. So again, you can see the sort of little dips with Project Catalyst payouts coming in, and then up here we've got the reserves being spent as we head down. And so this takes us all the way to 2031 at the moment without heading it in trouble. This crossover point between reserves and treasury maybe 2028, something like that. So we've got some time. We've got some good amount of time to reach that point of equilibrium. But this is important factors in looking at viability and long-term sustainability of the chain. Cool. Any questions on that, or is it all a bit too deep and technical? I'll move on. Good. So now to some fun news for the pool. So let's have a look at stake pool from our favorites blockchain explorer, pool.pm. We are now sitting at a nice healthy amount of delegation. 1.45 million ADA is staked to the pool, and we are up to 73 blocks minted. And our number of delegates is jumped from 77, which we've been at about that level for 6 months or so, it's up to 114. So we've had a whole lot of new people join the pool, and that's on the back of us having achieved status of being invited or allowed on to the Coinector initial stake pool offering. So Connector is a project building on Cardano. So these represent all the new wallets being staked with the pool. So all these have happened in the last 28 days. Actually, sorry, 7 days is really when it started to accelerate. And so these guys are all related to the Coinector ISPO, as far as I can tell. And this is the Coinector project itself. You can see we're listed on here, Fluid Pool. And so we are one of only 16 pools at the moment as part of this ISO. And this is what's known in the biz, what's become to be known in the biz as a fair ISO. So effectively, instead of this Coinector project starting up their own stake pools and getting everybody to delegate to them in return for earning their native token, their Coinector token, they've said, let's use the existing infrastructure of the stake pools that are out there already, who are, most of them actually running at a loss because they're small pools, and let's give them the opportunity to gain delegation from people who do want to participate in earning native tokens, but do it using pools that are already around, already paying out for the infrastructure on Cardano. Let's reward them with helping them accrue extra delegation through our token launch. And so this is a fair ISO in that regard, in that CoinExo are not being greedy. They're being very generous in distributing their token by using staking mechanism in these community pools. So any of these pools are worthwhile having a look at. Ones I want to mention in particular are Upstream, who are good friends of mine now. They run the London Summit, and so they've invited me 2 years in a row now to speak on their panel of stake pool operators, which is very kind of them. And I'll have to find something to do for next year, I imagine. But Upstream, great guys. They run events, live meetups. They also have an NFT project going on, and there are effectively a group of 7 guys now, I think, all childhood friends who've grown together and actually decided to launch a stake pool and events sort of business off the side of it. So doing great work. Another one would be Rumor, who's quite new to the space, but is working really hard in terms of getting awareness, and he's also contributing to a whole lot of different technical projects too, so he's worth a look at. And all these guys are small stake pools underneath sort of 5 million when they got into this ISO. And once one of these pools hits 5 million delegation, and we've had 2 rise above 5 million delegation now, then extra pools on the reserve list are invited in as well. So this list will keep growing. At the moment, we're sitting 5th. So we might see enough delegation come in that raises us up into that sort of 5 million region, which would be phenomenal. But there's no guarantee of that, so we do need to keep spreading the word and talking about the pool and what we're up to. But this is a real encouragement to me to keep going with the pool, because it gives us awareness in the community, and also, as delegators, every one of us will now be receiving CNCT tokens as well as our ADA rewards. So if you do want to have a look at the CNCT token and what its potential is for the future, what utility it offers, who the Connect guys are, then this is a good blog post to have a look at first. So they are effectively a token launch platform. So what they're doing for themselves as a first off, they will be doing for other tokens who want to be launching on Cardano. Because there's a whole load involved with launching a token. We've seen the simplest part of it, which is on the A starter site. You can just plug in some details and mint a token on Cardano. But actually, there's much more involved in terms of, as I was showing you in that IOG developed chart, what their token amps were, what at launch, how much proportion was given off to reserves, how much was given off to public sale, how much was kept hold of by the IOG to themselves, how much was given to the foundation, how much was given to the enterprise partner, Emergo. All these sorts of thinking can be put into a generation event, and CoinExo are there to help with that sort of side of the ecosystem. On page, this is one. So you can go and see how they've designed their token launch, when it's happening. This is in regards to their ISO, the initial stake pool offering, because that's a really good way of launching a token, is actually to offer a chunk of it for free to delegators to stake pool, because that gains you a whole lot of attention, a lot of media attention, and also gets your token out into the hands of people. A token doesn't cost you much, if anything, to create. So that was one of your questions, Carol, how much it costs to create a token. It's actually just a bit of ADA, not even much. You pay your transaction fees, and then if there's a platform fee as well, you'd pay that. But you can actually have your own token generated for next to nothing. the real value is then what you put into it in terms of who you're giving it to, how much you're retaining, how much they're going to talk about it, how much sort of media attention you can garner off that token launch, whether you're putting some into liquidity on exchanges so that people can actually trade it with ADA or trade it with other tokens. All this activities then goes towards to really define the value that's stored in that native token. And so this Launchpad platform will be helping people get attention, technically handle the launch of the token, just distribution of that token. Because again, we've seen the complexities even with our Opportunity DAO project. We set up a multi-sig wallet. We got people to send in their information into private forms. So we've got data storage, we've got scrutiny from data protection providers all around the world, that we're actually maintaining our data effectively. You've got the mechanics of managing a treasury, so multi-signature wallet, so that no one person can spend the treasury. It takes at least some consensus amongst people in this. In our DAO, we've got we have to have a quorum of 3 of 5 to actually spend anything from the treasury. And then you've got the distribution. There's going to be transactions we create and then have to be released to multiple people at once. So you've got to have all the stakers in that opportunity. I can't remember how many there are, 20, 30 of us. All those wallets need to be represented. All of those wallets need to be rewarded with a token at the launch event. So that mechanism is involved. It's resource intensive, time intensive, and these guys are building platforms to help with that. So they will have real utility, and that's always good to see that it's not just a meme coin or a fluff token. It's actually got real business behind it with a plan. So if you do want to read up about the CoinEx project, have a look through here, and with their tokenomics, there's 1.6 million of the CNC tokens are going to be available through this token launch. You'd want to compare that with their full-blown token release, which I did think is listed off here somewhere. Maybe I find it somewhere else. Yeah, it might be on another one of their posts. I'll look for 30 more seconds or 10 more seconds and I'll give up. Tokenomics, that's it. So this details how they've split their token up at launch. So a large proportion of it is going to be put into staking emissions. So that will come out over time. If you're holding of the CNC token, you can actually stake it back with their platform and earn additional CNCT. This FISO, Fair Initial Stake Pool offering, is what we are participating in now. Yes. Any questions on any of that? Do shout up. But that is the sort of complexities involved around token launches and generating tokens. But all this stuff is available and out there. There's utility in tools with no documentation in a lot of cases, and so these sort of white papers from guys like this actually help break down what's involved in token launches and what sort of utility you can apply to them that would garner you most results, best results, and help you achieve what you're trying to with your tokens. It's well worth a look. Now that was actually my last point in particular that I wanted to cover today. So I am open for anything you want me to be looking at, just browsing the world of Cardano with you. Anything that's picked up from the last bit of conversations.
What do you think about the price at the moment of Cardano?
It's very nice to see some price movement, and And in comparison, I've done a bit of analysis comparison with the chains. It's always nice to look at your neighbor. CoinGecko. Actually, that's one thing I do want to touch on. So there are two sorts of primary price tracking platforms that I have used in the past: CoinMarketCap and CoinGecko. I've always thought CoinGecko was more fun, less technical than CoinMarketCap. CoinMarketCap's been a bit dry, but actually now I've got more reason to use CoinGecko from this point forward. Is that CoinMarketCap actually have revealed, there's been things revealed in the community that are not too encouraging. CoinMarketCap is actually strongly tied to CZ, the founder of Binance, which is not a problem. I really like CZ, but it's a tie between one particular exchange. There could be some, an exchange that has tokens in and of its own right as well. So there's always a bit of muddying of the waters then when you've got a public token analysis platform actually having ties with a large token generator and holder, and the largest exchange in the world. It's not too great in my mind to have effectively a body of the press or research analysis portion of the market tied with a large an entity that has a large vested interest in the space. So I that's one flag against CoinMarketCap. Another is that it turns out that to get listed on CoinMarketCap, you do have to put up a whole load of cash. And in any ecosystem where you're having to pay for position, that raises question marks over how valid those positions are on the site. So the market movement, the market price action is one thing, but actually how the tokens sit on price, what sort of exposure they get, news articles that are being put alongside those items, I suspect probably correlates quite strongly with how much you're willing to pay for your listing on that site. And certainly we've had some big projects that I personally like, but don't have large public profiles as of yet. One of which is the Ergo blockchain. They have run into significant problems with getting a listing up corrected on CoinMarketCap. And effectively, it seems the only way that they can do it is by paying out $55,000 to CoinMarketCap to get their listing improved, which is a huge amount of cash to ask of anybody just to list you on their public information website. Another project on here as well, MinSwap. There were some inaccuracies on their listing, then led to some of the native tokens on Cardano not be getting any chance of being listed on site. And again, the teams have been forcing information into CoinMarketCap, and effectively the word back has been, we're not doing anything until you pay out cash. And it's not as much, but it's still £5,500, I think $500,000 to get listed with one of these lesser tokens. So they really are asking money for what should be, in my mind, public information. So now I'm kind of exclusively using CoinGecko, and I'm willing to say that publicly. So CoinGecko is where I do my price action monitoring now. So we can see, again, everybody in the crypto space effectively follows Bitcoin movements. And there's a great meme I saw. I probably won't find it now, but yeah, it's going to take me too long to find it. But do you remember that scene in Forrest Gump where he's in his running phase and he's a long distance runner and he heads out across the desert and he picks up all these followers who are just running along behind him, and then he gets to some point out in, I don't know, it looks like Death Valley in the desert, stops, says, I think I'll stop now, and turns around and there's the crowd of people and they all say, what? They're just looking for what to do because they've been following him. They don't really know why they're following him, just following because he's a runner. And it's kind of like that in the crypto space, in that all the tokens in terms of price action just follow Bitcoin, and we're all standing a little bit behind, don't really know what's going on, other than that we want to see what Bitcoin does. And so that's where your first source of information should always come from, is look at what Bitcoin's doing. It probably indicate what your token will be doing shortly afterwards. So Bitcoin made the move. The ETF rumors resulted in a movement of the price toward an upward direction as opposed to where it's been for a long while, horizontal. And as a result, you can see every other single chart on here is following a very, very similar pattern. Now, the last day or two, we've had a big retraction in price movement on a lot of these tokens, some more than others. But in particular, I like to look at Cardano, of course, and really, in terms of the trajectory, it's not changed. We're still on a nice upward climb. We did have a big dip down yesterday, but it's pumped back straight up again today. So that's an indicator. The smoother a line is, the happier I am, really, because these big pumps and big drops, volatility is good if you're a trader, but I'm not predominantly a trader. I just want to see slow growth, because that would, to me, represent people. Yes, they like the look of this chain. They're buying into the ecosystem, and a large market cap will dampen down the effects. So Bitcoin's tends to be the most stable of charts in the crypto space. But Cardano, is starting to establish a decent looking, smooth chart as well. So that's what I like to look at. And the price up has been really, really nice. So that's saying 18% in 7 days, and I think we're at 25% in a month. So that's a nut, especially as I am heavily invested in the Cardano ecosystem, both technically, time-wise, and in my investment portfolio. It's very nice to have that rewarded back to you after what has been a very, very downward-looking past couple of years. So let's have a look at the 30 days. Yeah, that's when the price started to move. So we're up from 0.24 to a peak of 0.38. Which is a really significant move. If I jump into trading view, we can actually do a measure. Put this to 1 month. So yeah, we're up 60% in this 30-day period, which is great. you can't imagine doing that anywhere else. No stocks or shares or anything like that. So we're glad we invested, and we're going to be monitoring it, over the next year or two to really, we really expect to be back up to our all-time high before too much longer, maybe 6 months, 9 months. I think we'll be heading back to our all-time highs again, and then it's a case of wondering where we go from there. And our all-time high is still 10x from here, pretty much, because I think it's not quite anymore, but we were $3 for our peak price, and this is 38 cents. So just to get back to where we were 2 years ago, let's get a 5-year chart. That'll take us back all the way up to $3.10. And so in the scheme of things, we haven't moved very far. And if you did buy at the bottom, you're up 60% already. So it just shows you the sort of massive potential that is in new markets, and particularly when it's a market that has got so much potential and utility, then it is certainly something you should be looking at for a small portion of your portfolio. Don't throw everything at it, but if you are a serious investor, then you've got to be considering it as that highly volatile, high risk portion of your portfolio. But that's where you'll see the most growth, and can really sort of contribute to your foundational layer. So yeah, we're still in the early days of this. I mean, we might not be out of the bear market yet. That's still potential for the price to drop back down. But certainly the news is all pointing upward at this point. So the ETF announcements, the slap on the wrist that the SEC is getting, the number of politicians who are now speaking out about being pro crypto, even the Rishi Sunak UK Prime Minister has said that he wants the UK to be a digital currency hub for the world, and really sees that that really the only thing of value the country has anymore is its economic power. Our Canary Wharf, which is where all the markets really happen, is a significant player in the economic playing field of the world, and a lot of that is just fluff and float, and prestige of having a history, but that's something we want to retain. And I think the only way, and Rishi Sunak is now saying the only way we can really retain that is by innovating and by looking to be part of the new generation, the digital generation for money control. And so that's a good indicator at the industry that we are looking at, spending our time building in, is part of the future. So yeah, interesting to see. Anything else in price that you wanted to look at? I did show you the DeFi Llama chart, which again, just within crypto, that's always interesting to look at. So the sort of market cap for Cardano is now at 251 million at the moment, which is just off our all-time high. If we look at it in the scheme of things, this is again is value locked in certain things. So in lending, borrowing, in staking, in liquidity provision. So these areas are easily recognized as being locked. So it's where people have been confident enough in their space to actually take their money out of their wallets and put it into participating in the ecosystem, in the financial ecosystem. And so that's a bullish indicator that people are confident in the space. And so 46 billion is locked up in cryptocurrencies now, for portions of time ranging from 24 hours to years. So the outlook is rosiest when you're looking at these sort of figures, to the tune of 46 billion. The market cap as a whole is something like 1.3 trillion for the crypto industry. It's at $1.45 trillion in digital currencies as a whole. Within that, 46 billion of them are locked up in projects on chain. And then you can go down to the chains looking at so Bitcoin is 248 million locked in Bitcoin. Ethereum, which is the largest by far, is 25 billion. And then you can look at some of the smaller ones, including Cardano, which is at 251 million as well. So Cardano now has more locked in it than Bitcoin does. That's something to shout about. And it's mostly because Bitcoin doesn't really have utility. It's a store of value. It doesn't have smart contracts. And so a lot of these other things are built on side chains to Bitcoin. Like the Lightning Network is a fast settlement layer for Bitcoin, and has the most amount tied up in it. But yeah, in terms of utility, then you really need to look at a smart contract based platform like Cardano, Polkadot, Ethereum, and that's where you start to see more locked in. Of course, Ethereum is the first one to bring smart contracts to the space and has significantly more locked up in it. But even in its chart, actually, it's not seen a significant increase. So it will probably suffer in terms of losing some value locked in Ethereum over to the third generation blockchains like Polkadot and Cardano. So yeah, Ethereum is certainly still going to be a power player for the next cycle, but it will have less dominance, and we'll start to see some of that dominance move over to third generation chains. In fact, maybe one thing to perhaps touch on in the last 5 minutes is at the Cardano Summit. There was significant presentation by Midnight, which we're starting to learn a bit more about. It's been a very, I mean, it's living up to its name of being a privacy chain in that it's very hard to find out decent information on it. But Midnight is effectively going to be the privacy data protected equivalent to Cardano. So it is based on a lot of the same technology, but it's supplemented that technology with zero knowledge proofs. So to understand zero knowledge, let's do a quick analogy. So imagine you wanted to share a bit of information with somebody else, or prove that you knew a bit of information that somebody else wanted to know, without actually showing them that information. So you could be at a border control or at the doorway to a pub. You're maybe quite happy to show your passport to your full passport, which has your place of birth, your you know, all the information that's needed to steal your identity stored in the passport. You may be happy to show that to a government official at a border control, less happy to show it to a bartender at a bar to prove you're 21. But you know, you need that same level of assurance. Yes, this person was born on this date, they've lived for this long, or it might just be, I just want to prove that I'm over 21. Doesn't matter how old. Just know, you know, you don't need to know how old I am. I just need to know I'm older than I need to be to buy a drink from your establishment or to drive your car. So zero knowledge proofs are starting to release power to us that we'll be able to do that without revealing any of our information. And this is very important once we start to build identity onto the network, because you don't want to be handing over. At the moment in Web 2, we do that with Google, we do that with Amazon, Facebook. We give over everything. They know everything about us. They psychometrically profile us down to a T. They know exactly what adverts to show us that will trigger us into buying from whoever they want to be, you know, they can find to sell to us. And that, you know, extends into manipulating us for voting as well. So we need to remove that power from their hands, and we do that by retaining control of our data. They only need to know the bits of data, proof of data as needed. So I need to be able to use a gambling platform. I need to be over 21. You only need to know if I'm over 21 or not my date of birth, not how old I am now, and certainly not my home address or anything like that. So this is where we need something called zero knowledge. And if you want to have an example of it to understand it, if I held some information and Archie wanted to know that bit of wanted to know that I could prove that I knew that bit of information, but not necessarily have to see that, then we might say, okay, let's have a safe. Let's create a safe where only we have access to it. We have the keys to the safe. And so the only way that anybody can read that information is if they've got access to that safe. And so Archie might say, I want you to prove that the information that I say I know, you actually know as well. And so we'll take a bit of that information that can only be known if you know this full set of information. So that might be some kind of, you know, data, identity knowledge, or a fact, or fiction, or, you know, a date or a value. We can write that. Archie can know the answer already and say, I want you to put into the safe that only us two have knowledge of, a bit of information that shows you know the full set of information, and then come back out again. So I'll take a bit of this information that shows that I know it, write it on a bit of paper, put it into the safe, lock the safe back up again, and then Archie can go in, unlock the safe, get the information out, and that way she knows that I actually have this information because I was able to unlock that safe and put it in there to say that, yes, this is Jonathan. So it's going to lend itself into more and more situations like that, where you need to prove that you know something without actually revealing what you know. And so once you've got that ability, you can start to have privacy and data protection. So Midnight is a chain that's going to leverage zero knowledge proofs in all its work. So like I've talked about in the past, at Christmas, you don't necessarily want your friends and family to know what you're spending on their Christmas presents. If you're buying all your Christmas presents with Cardano, then all your purchases are on chain. And so if they want to go and do some analysis, they can find out your wallet address, find out where you've been spending your money, find out what presents you bought them, how much you spent, and then judge you accordingly. What we really want is to have all our transactions hidden away or obfuscated in a layer that we can still have full on 100% accuracy of tracking of spend for accounting purposes, for paying tax on it, but have no revealing of that information to somebody who doesn't need to have that information. If it's a shopkeeper, yes, they can know how much we're spending on their products. Anybody else doesn't really need to know that. If you're in a business deal, you don't want all your activities to be known about because the other party could be a competitor. And so we need a chain that has that level of obfuscation in as well. And Midnight's going to be that, have that ability. So the website for it is now up. And they're revealed that they're calling themselves a fourth generation blockchain now, because they've added in this sort of zero knowledge layer. Whether that'll stand the test of time, I don't know. These numbers don't really mean anything ultimately anyway, just about what you're capable of doing. But this is an exciting project. Particularly exciting for you because, as far as I know, you're all ADA huddles. Actually, Paul, I don't think I've spoken to you before, so I don't know if you hold ADA or yes or not, but if you do, hi, nice to meet you.
No, I don't. This is the first call I've been able to attend because work normally prevents me.
Okay.
I will just say thanks very much. It's amazing for information, so that's been brilliant.
My pleasure.
And I was kind of struggling. Your point about how everybody's following Bitcoin, I was kind of struggling with that pull effect. Kind of makes it hard to tell how much of the value is down to genuine utility for each crypto. But anyway, that's just a sidebar. But yeah, thanks very much. It's been really good to see this today, and I'm going to make more effort to get involved, to book time out of work so as I can get on these in future. The thing about this Midnight piece you've just mentioned, though, is doesn't that kind of negate some of the transparency of crypto and the blockchain?
Yeah. So this is the sort of the dilemma that we have, because we need to be able to recreate what we've got in our current financial systems in digital currencies, but we want to have that gold standard that Bitcoin set of full transparency, permissionless access, and to do that, we need another layer of technology. And so the Midnight guys are working on that, in that they'll be able to hold the same sort of stringent level of account keeping and tracking, well, not tracking, but account keeping and proof of accounting without revealing the exact parties and where they're spending it. So we've got this, worked out already in chains on other chains like Monero, if you've seen that as a project. But every chain is going to need some kind of equivalent of that, and so Midnight is the one for Cardano, and it's really aimed at enterprises and those sorts of levels. And probably what will result in long term is that to participate in this chain, you will need to have a level of KYC. So there will be an identity attached to your activity on this blockchain, so that if those with the authority to know exactly, who are required to know what's gone on in terms of transactions. So that will be large enterprises making large purchases. There'll be governments looking to check tax liabilities on enterprises. then the KYC portion of it will probably be an entry point, and then from that point on, the data will be obfuscated. But those who do need to know it and have the permissions and the rights legally to access that transaction data will be able to do so. And so it's a compromise on that gold standard of openness, public, permissionless blockchain, but it's a probably, I can't imagine a world where everybody knows everything that's being spent. We've never been in that world before, and I don't really see it as a part of our future. So where everything is being done in that way. So this is a way to start to accommodate some of the requirements that we've got from our existing industries in the digital currency industry as well. And I did apply for DevNet, but I haven't got onto the first tranche, unfortunately. So I'm not into the ground, but maybe down the road I'll get a place on it. And the good news for everybody who is holding ADA, which is why I turn to you, Paul, is that they've announced that there will be an airdrop of Dust token, which is going to be their the native token, the core coin on Midnight Chain, will be airdropped to everybody who holds ADA as a way of engaging and onboarding the Cardano ecosystem into the Midnight chain. And they are calling themselves a partner chain, not a side chain or anything like that. So by partner, they mean that there will be a standalone, self-sustaining blockchain. However, they will be a partner chain to Cardano in that they share all the same technologies, underlying technologies, and the extended UTXO model, which allows you to do create bridges between the chains very easily if they are using that same standard. That will exist, and so there will be a Midnight to Cardano blockchain bridge at launch, so that the transactions that you want to be carrying out in private, you can port your ADA over into Midnight and back again without issue. So how that will represent itself for us as individual investors or speculators, or whatever you want to call us, I don't know yet, but it could be that you can take your investment, a chunk of investment, say, yeah, I want to move it into some obscurity, level of obscurity on Midnight, buy into some regulated projects that I want to be buying into, but shouldn't be public knowledge. I don't know what that might be. I'm trying to pull things out of my head here, but yeah, that will be where you could do it. And then down the road, you can pull your rewards back onto the public Cardano blockchain again, as you wish, as you see fit. But that facility will be there at launch. So we'll see. And the fact that we're getting Dust airdrop to us is a very good nod to the legacy that is in Cardano forever now, really starting to you're taking what you've learned and grown from and distributing it into new levels of technology down the road. So Midnight is brand new. It's not launched. They are looking to onboard people by the 13th in terms of their DevNet, but we've got no real launch date as of yet. So it's not here yet, but it is on the way. And they are starting to drip bits of news about its utility and use cases and benefits to people in the Cardano ecosystem, as that's who it will primarily serve. So it's interesting to see. Yeah.
So do we need to do anything for this airdrop from our side?
No, just have so the airdrop. We don't know when the snapshot will be taken. But at the point of that snapshot, you will have to have the ADA in your wallet. So if you do go on to do any liquidity provision on DEXs or anything like that, or you lend it out or borrow off the back of it, then that ADA won't qualify for the airdrop. If you just have it as ADA in your wallet and staked to community pool like Fluid Pool, then you will qualify for the airdrop for the full balance of your ADA. So yeah, in that regard, it may be at some point, if you are participating on some other protocols, that you want to draw your ADA back out again and leave it on there for the period of the snapshot. But yeah, we hopefully will have details of that before it's made, before that snapshot actually happens. We'll have public details made, which I suspect it will be. And certainly they're not looking to launch for months, most likely, rather than weeks. So
Okay,
we have time still. And I'll get that news to you as soon as I hear it.
great.
And likewise, if anybody hears before me, then let me know. Good.
Jonathan,
Okay.
could I stretch the friendship and ask you one little question?
Sure.
On Discord, I actually got a message, and I've not had one of these before, and I don't know whether it's safe to do it, to touch it. It's actually saying there's a USDT airdrop, and it's got an incoming friend request. Do I just ignore that?
Yeah, certainly. I mean, 99% of airdrop, unsolicited airdrop messages, emails will be scammers. So you can safely ignore all of them.
Just ignore them. Yeah, that's what I thought, but I just thought I'd ask you because I haven't had one before. Like that.
No, and it's always good to ask, because now I'm aware that there's a USDT airdrop going around, and I can look at it as well and and turn my nose up at it like you will. So we need to talk about these things because they are part of the ecosystem still, unfortunately. But yeah, don't be taken in by any airdrops. Do talk to someone else about it, and share the knowledge so that we can investigate it at least and come to the same conclusion. And it the 1 in 100 may be a positive thing, maybe a good thing, because we have had several airdrops happen in over the last couple of years that I've shared with you, and have benefited us. And some of the ones I've been involved in have benefited me massively. So airdrops are a real thing, but like this dust one, that's going to be a safe one. But on the back of there being real ones, there are going to be 99 spammers, scammers trying to just get access to your funds. So don't participate in them. I mean, that's one of the things going for Cardano. If you are looking at, if you're new to the digital currency space, do look at Cardano, because the underlying, and this is why I'm in Cardano, the underlying technology layer is really secure, really robust in comparison to second generation blockchain Ethereum and its cohorts. And that's because we were able to do things from the ground up, from scratch, really, whereas Ethereum is having to correct its and patch its past problems. So that gives us an advantage in Cardano, to the extent that there's never been a hack on Cardano, which is an amazing, there's never been a hacked wallet, which is amazing. We've become very close, but nothing, as opposed to other chains that track their security metrics in terms of millions of tokens stolen per month. On Cardano, that figure has stayed at 0 to date. So, we are in a really good place. It's quite difficult to steal from somebody on Cardano, other than if you hand over your seed phrase or sign a transaction that you shouldn't be signing. So it is a safe place to operate in, but still be aware. No doubt we will have an exploit that's taken advantage of at some point. But to date, we've been very good, and I do put that down to the technology. At the moment, I'm studying Haskell, which is the underlying programming language for the course, which is stretching my abilities, I must say. But even in that, I'm getting insights into the robustness of the what it boils down to is the maths in Cardano is really, really well protected. So it's very hard to make a mistake that will in your maths that will then result in code that is illogical, and will ultimately produce applications that can be exploited. All of that is really error checked and measured hard from the very smallest part of coding in the blockchain. So Haskell, and then you've got an abstraction layer, Plutus, And then above that, you've got domain-specific languages like Marlow. There's ability to build applications of Cardano that are, ratified to the same degree of robustness as the blockchain itself. That's what it boils down to. So we are in a good space. It's much easier to build secure applications on Cardano than it is anywhere else that I've seen. So but don't sleep on those accolades so far. Pride always comes before a fall. So that's the same in any space, unfortunately. But yeah, I've probably taken for long enough. Paul, if you do want to catch up on any historical calls, I do get these up on YouTube. So there's 50 Cardano Q&A, hour and a half long calls. You can go back and dig through if you're so inclined. But yeah, joining live is always more engaging. And you get to ask questions. I do like to run it as a workshop. So any questions you do have, join the calls live and pop your question in, and I will answer anything that I'm able to and feel confident. And I always give you a degree of confidence in my answer as well. So I don't try and spoof anyone. Good. Well, thanks for joining, everybody. Great to see you back here. Those have been away, Archie. Do enjoy your travels. Hope you stay safe. And
thanks, Jonathan.
I'll catch up with you next week if you can make it.
Yeah. And thanks, and have a good weekend, everyone.
Yeah. Thanks.
Bye.
See you all soon.
Bye.
Yeah. Cheers, Dan. Bye-bye.